Hi, I'm Joe Ovsenek, President and CEO of P2 Gold. I'm joined today by Ken McNaughton, Chief Exploration Officer for P2 Gold. We're both advancing the Gold Copper Gabs project in Nevada. We have a PEA update coming out shortly, and we're looking to move Gabs through to production in Nevada as soon as possible.
Guys, good to see you again. It's been a couple of years since we spoke, about slightly over. Last time out, we talking about Gabs and BAM. I think what you told me back then, you were keen to kind of get a PEA on Gabs finished, sell a royalty on it, then maybe do a drill program on BAM, and maybe hit a porphyry. So what's happened since we last spoke?
Well, on BAM, we drilled. We didn't hit a porphyry. We did have good indication of where the porphyry might be, but we decided to refocus, put all our effort into Gabs. Just too expensive to work up in the Golden Triangle. So with Gabs, we're pushing it ahead, and we have completed a PEA, and we have an update in process.
You got the update, so you did one 2024, and there's going to be a 2025 update. Can you give us the 2024 numbers, just so we sort of understand what we're dealing with?
Look, we had an eye on, using a base case of 1950 gold and 450 copper.
Yep.
Silver doesn't play a big part in our project. We have a bit. We had an internal rate of return of 21.6%. So reasonable return. From memory, it's a little ways back now, about 300 million in NPV5. On spot prices, we've run that model with current spot prices. Rate of return, say last week, was something like 55, 56% with an NPV 15. That's a 15% discount, just over $600 million. So the project is robust, and it really responds well to these increased metal prices.
Right, and we better describe to people what exactly Gabs is. I mean, if you maybe talk to the project, and then we can kind of get into the kind of commercial component in a second.
I'll take a quick run at it, and then Ken will chime in. So we've got 4 zones of mineralization. 3 zones are porphyry mineralization. They all come to surface, all open for expansion. We currently have an indicated resource of about 1.2 million ounces gold equivalent, and roughly another 2.3 million ounces of gold equivalent in the inferred category. And it is gold copper. And so if you look at that, roughly 3.5 million ounces of resources, roughly 2 million of that is gold, and 1.5 million of that is copper as an equivalent to gold. Ken, any comments on the project?
Well, great location. I mean, one of the first things we saw when we looked at it was Central Nevada, highway access, power access, low utility land. There's really nothing in the area but some old mines, a couple small producers. Great historic resource. I think when we bought it was around 1.7 million ounces equivalent. But we saw where the drilling had been quite shallow and the opportunity to expand that. So, which we did with 2 relatively small programs. So, the only knock against the project historically was the copper and gold in the oxide component, because a cyanide will go after copper as well as gold, which made it uneconomic. But since that work was done in the early to mid 90s, the development of the SART plants has taken on. It's well adopted within the industry, and that allows us to recover, produce a copper concentrate plus gold doré, as well as regenerate our cyanide. So our cost of operation comes way down because our cyanide consumption's dropped considerably. So we saw nothing but potential, and we continue to see that potential as we develop the project.
And what's the split between the gold and copper? I'm trying to work out the kind of sensitivity to the copper and gold prices.
If you look at our base case prices, 1950 and 450, we were in that 30 to 40% range now of copper to and the rest gold. Now copper, with gold taking off and up to $3,400, we're down closer to 20-25%.
Right. Okay. So I think you've always said to me you kind of want to advance quickly to production. Just don't want this to be stuck in sort of exploration or development phase, quite frankly. So how are you going to go about doing that? I mean, how have you composed the PEA, to allow to kind of get through it into kind of feasibility study relatively quickly?
We've just completed a third phase of metallurgy, so focused on the SART that Ken was talking about recovering the gold and copper and oxides. Those results are really turning out well. We expect to increase our recovery significantly, which we'll see in the updated PEA. But we'll get that updated PEA. We plan to do some more drilling, into some expansion drilling. We need about a couple thousand meters. We think we can up the resource north of 4 million ounces of gold equivalent. We then need about 10 to 15,000 meters of infill drilling to take the inferred up to the indicated category for our feasibility. And then we're going to launch straight into feasibility from PEA. There was a lot of historical work done on the property in the 80s and early 90s, especially on the flotation side for milling. And so our plan the way we plan to approach this project is we start off mining, throughout the mine life, it's 9 million tons a year for 14 years, 14.2. The way we deal with that is the first 5 years is 9 million tons a year of oxide. In year 6, we start processing 4 million tons a year oxide and 5 million tons a year of sulfide through a mill. Historically, there's a lot of data on the flotation of the gold and copper through the mill. We have access to all that data, so we're very, very comfortable with that. We've done some tests to confirm it. It all works out well. So the idea is we don't need a lot more work. Let's get the PEA out and then start moving and take the steps necessary to get a feasibility study underway, as well as start the permitting by filing a mining plan of operations with the BLM as soon as possible.
Okay, so you obviously just want to come back to the beginning of that conversation. You talk about obviously the metallurgy. You put out a bunch of announcements about it in the last 2-3 months. 88% on the gold and sort of 67 on the copper. How does that kind of translate at scale with kind of heap leach versus kind of milled operations? And maybe I don't know if Ken wants to kind of get into maybe helping people understand what a SART plant actually does, and again that kind of scaling from lab and column tests into kind of commercial level.
There are a lot of SART plants out there. It's not like we're taking a new technology. Yeah. If you look at, that Filo project that BHP and Lundin Mining just bought down in Argentina, Chile on the border, big gold, copper, porphyry, they have a SART plant. Fortuna Silver has one at Lindero, Gold, Newmont, and Yanacocha. So these things are becoming more and more common. And what happens there, the way they work is you run your heap leach similar to any old heap leach operation where you crush your rock. In our case, it's down to about a 1/4 inch. You put it on a heap. You run your sprinkle, essentially you sprinkle a solution on it that contains cyanide. That solution's recovered, runs through a SART plant. And in a SART plant, all it does, SART stands for sulfidization. I always have trouble with that. Acidification, recovery, recycling, and thickening. And so what you do is the solution comes in, you add the sulfur, and you convert the oxide copper into a sulfide copper. You then add the acid to drop the pH. The copper precipitates out along with a lot of the silver. And then you add acid to increase, lime. We've already done the acid. We add lime, increase the pH up to about 11, and we recycle the cyanide with that. We then take that stream with the copper and silver precipitated out and run through our gold recovery plant. The solution is then taken from the gold recovery plant and circulated back around. And these things are very common in the industry now.
With the kind of grades that you're seeing, I mean, is it fairly homogeneous in the sense that it's predictable? When you do your infill, have you got a good sense of what you're going to find, or the higher grade recovery zones?
Really, particularly Sullivan, where we have the most data. Very predictable. It's somewhat strata bound. The higher grades are hosted within a monzonite. The cap rock is generally dead. the volcanics underneath, nicely behave. So that system really works well. We're seeing the same sort of conditions over at Lucky Strike, and between the two zones, that's 90% of our resource. So, a little bit more structural component, but we also don't have the drill density at Lucky Strike that we have at Sullivan Zone. So, yes, the short answer is very predictable, very consistent, and which is why with not a lot of extra drilling, we were able to upgrade our resource, a big chunk of our resource, to indicate it. So the statistics work out really well.
So this will be like whole ore leaching versus any kind of like hybrid requirement, you reckon?
Yes. Yeah.
Okay,
Other than the oxide goes to heap leach, and then the sulfide will go to mill. That's the only differentiation. Otherwise, it's with ours, our cyanide concentrations in our leach solutions are a little higher, but it's because we're leaching so much copper. So we have to make certain we have lots of free cyanide. But other than that, this is going to look exactly like any typical Nevada heap leach.
Okay, and so how do these kind of improve leach kinetics, impact cash flow in the first few years?
Well, the leach kinetics, if we showed you a graph, on our previous columns in 2022, they were still leaching and rising at 145 days. And our gold recoveries, we get essentially 98% of the gold out in less than 60 days now with the improved cyanide distribution that we put in. And our copper is pretty well maxed out as well by, roughly 90 to 100 days. So the kinetics, by adding cyanide during agglomeration and then increasing the cyanide concentration on the leach solutions, we drastically move the kinetics up, all of which then reflects on the amount of leach pad and your leach cycle. So all of this, one, we get higher revenue, and two, we can lower the footprint on the initial construction.
Yeah, so we save Capex.
Yeah. Well, I think obviously a trend of the moment seems to be bulk sample leaching or pilot heap leaching. Do you on the network? Would you be doing any of that again? Just going to see if we can contribute something additional to the bottom line.
This is milquetoast. Other than there's gold and copper together. That is if the copper wasn't there, this would have been an abandoned mine 30 years ago. So it's only with the advent of the SART technology that this is now economic. But otherwise, there's absolutely no reason to go to a bulk. There's no issues on our leaching that we would need to, show that with a bulk test.
Okay. And just on the current PEA, 24 PEA, what are the kind of major kind of Capex line items on that?
Well, overall Capex for the pre-production Capex is $365 million, and we're going to look to sharpen the pencils on that. And as you mentioned, kinetics, we think with the increased kinetics, we can bring that number down. Then when we go to the mill itself is another $350 million, and then there's a couple $100 million of sustaining capital. And the way we envision moving the project forward at our base case metal price of $1,950 gold was you start the heap leach, in 3 years it's paid off. The next 2 years you're constructing, years 4 and 5 you're constructing as well as making cash that is paying for that construction. And then in year 6 you start mill and heap leach, and the mill's paid off partway through year 6. With the current gold price that, the heap leach is paid off in a year, and the cash is in the bank for the mill within another year and a half. So it's a different world with the current gold price.
And where are you guys taking this to? See, are you Explorer developers looking to then offload it, or do you think you're the guy who's going to build it?
Look at the way we've always viewed things, and we did this with Brucejack, is you have to build. You have to be focused on building, and if somebody else wants to come along and take it from you, well, fine, as long as they're willing to pay for it. But if you just move a project forward and put a for sale sign up, it languishes, and you don't really get the best value for your dollar.
Sure. Talk a good game and be able to execute if no one comes along. Are there many other kind of Nevada-based developers moving into production, or anyone who's got into production that you can sort of comp your costs against? Because obviously the last few years have seen a few companies, let's say, fall over at the last hurdle. So what are you learning?
Well, we've got Campus Cassidy and doing our work. And one reason we picked them is, they're one of the guys who started this heap leaching in Nevada back in, late 70s, I guess. Yeah. They started up. And so they have access to a lot of data. So we're in the process of updating our costs right now for this 2025 PA update. They have access to, because they're constantly doing projects in Nevada. And so we have access to the latest costs. So we know that there is cost creep, and we will have it in our 2025 PA. So we're not going into this with ideas that, we have some numbers from 2023 and that's what we're going to build to. Now, that the world doesn't work that way, and so we're well aware of it.
Yeah, and finding comps is a little difficult because, when it comes to Nevada, you're either big, Carlin Valley and, Round Mountain kind of things, or you're small. You're 40, 50,000 ounces a year or less. So, based on whatever statistics, we're going to be the third or fourth largest gold deposit and the third or fourth largest copper mine in Nevada. So there isn't many around if we can say, hey, those guys are like us.
Yeah, they're from like they've got Pumpkin Hollow as copper, Robinson is copper, but there's really no gold with the significant amount of copper like us that you can see around to use as a comp.
Yeah.
Okay. So obviously, I know you're updating the PEA and you're doing a lot on the network, but presumably a lot of sort of the geotech and hydrological stuff studies have fed into that. So the next question is going to be about water permits. I mean, have you got what you need?
We filed for it. We understand it's soon. We're waiting. We expect to get it this quarter. So that's still gives us another month and a half. We'd hope to get it in June, but from what I understand, holidays and everything else in the way. So we're still hoping to get it this quarter. So then we can. The way it works is you get you file for quantity of water, you get your permit, and then you go drill your well to prove that up. So once we get the permit, we will drill our well to prove it up. Historically, there was a well on the property with sufficient water for what we need. So that was in the early 90s.
Yeah, and consultants have said there's no impediment. They don't foresee any impediments to the permit being issued. As I said, it's very low utility land. There's no ranching. There's no hay farms. There's no farming. So it's just a matter of working through the bureaucratic hurdles.
Right. Okay. And sticking with bureaucratic hurdles, in terms of any kind of baseline environmental work that you've done to date, is there any reason to suggest that any kind of BLM permitting timeline might be delayed?
Nothing we've seen. We've done our studies, and historically, the project was this is pre-SART. It was permitted to go into production in 94 off from memory, and so a lot of studies were done then, and nothing's changed, and we've done studies since. It's, as Ken said, there's not much happening on the property.
Right. Okay. So I guess the 100% focus, because I'm like, cash is precious and I got to be allocated effectively. So that it's 100% on the updated PA. Is that what I'm hearing? And there's all of that desk work at the moment.
Yes. We're focused on moving things forward on the PEA. In the fall, we'll look to get on the ground.
Great. Okay, fine. And what stage do you start working with trying to get a mine plan of operations submission in and all of that kind of good stuff?
We're starting on that already. We have a fellow retained who's experienced in the area. We hope to get it done by the end of this year. We're big cash constrained. Let's just say if all goes well, maybe the end of the first quarter, you could see us get that filed, or creeping into the second quarter. But we're going to push on that next.
Okay, fine. And then you always go to Nevada. You go to the community work, community projects, etc.? I mean, how are you engaging?
Well, we will start engaging with the local community. There's a small community about 10 kilometers away, the town of Gabbs, our namesake, and there's a magnesium mine right on the outskirts of the town. So it's a mining town, and so we'll look to engage with the community. We've already engaged with some of the individuals there, but we'll increase our presence as we move forward.
Okay, and does that help with things like road, power, infrastructure, etc.? And presumably you don't need a camp.
There's roads. Like, we have an office in Hawthorne. It's about a 45-minute drive away. It's an old mining town, and a military base, and so has lots of services. It's all on pavement. We have roads throughout the property. Right on our south border is the old Paradise Peak mine. It was a high-grade gold silver mine. It's on care and maintenance, but there's a big transmission line right up to it, and from that a feeder line crosses our property. So we have access to power, got pavement. As Ken mentioned earlier on, when we were looking for a project, Gabs stood out for us just because of its infrastructure. It's just couldn't ask for a better place to build a mine.
Okay, like I said, it's been a tough environment for a lot of juniors. You've been sort of tidying up the balance sheet, amongst other things. What's the balance sheet look like now?
We're about, let's just say, $1 million. So we're going to need money, but we've kept the company. We've been putting our own cash in to keep the company going. We've had some help from some others, and so we're committed to moving Gabs forward, whatever it takes. And so we'll make it happen.
Yeah, no, I get that, and you guys have chucked out quite a bit of money into this thing, so don't be shy. But I'm more wanting you to kind of share with the viewers, readers, listeners of this thing, some of this sort of tidying up that you have done with converts, etc., to make sure that. And I always say to juniors, like, quite frankly, in the past few years, the name of the game's been to kind of stay at the table. What did you have to do?
Well, I think if we take it back, just for reference, we bought Gabs in May 2021, and we bought it. We paid $1 million US up front. We issued some stock in the company, and there was a further $9 million US owing. Now, we renegotiated that over time. We paid, $100,000 here, $100,000 there when we had the cash to do it. But come last February 2024, I should say, we still had an $8.8 million debt due to Waterton Precious Metals, who we purchased the project from. The market was bad. They realized it was bad. So we negotiated an agreement where we paid them $1 million US and gave them 5 million of our shares trading at about 8-9 cents. And that allowed us to buy 100% of the property. Now, to get that $1 million, we issued a convertible debenture for 1,665,000 Canadian. We picked up some of that, some other, it's all individuals. There is no big fund that came in with that. And, I think we're converted, about 500,000 has been converted. We're just over 1.1 million of that convert outstanding. It converts at 10 cents. So, and it's due at the end of January in 2026. So roughly 5-6 months away. And we're trading currently 17-18 cents. So at the current time, it's well in the money for conversion. So we expect to see it converted. However, we'll be looking to get some cash at some point, and we will make sure we have the cash on hand to pay out that convert.
Right. Okay. And Waterton are sitting on how much as a result?
They own 15% of our stock, so 23 million shares. They have no plans to sell it in the market. They do want to move it eventually. So at some point, we will be finding someone to pick up a block of stock off Waterton.
Right. Okay. Well, depending on what you do, I guess, could there be conversations in terms of their ability to help access cash later on if this thing is going to get built?
I don't think Waterton is that fund actually is winding down. It was a private equity fund. The main fellow was stepping back, and he's our age, so he's moving on a bit. So we don't expect support out of them, but we're comfortable in being able to raise some money. We've raised, well over $1 billion or $2 billion over the last 20. We've worked together since '96, so he's raised a lot of money in the meantime. We know what we need to do to get it done.
Well, tell me that. Look, you probably need to remind people. You guys were instrumental at Pretium, which was, one of the deals people kind of point to, wanting to emulate. So, what were any learnings from that as to how you move a project like this forward? Because obviously this is much more humbler beginnings.
Yes.
Than where you ended up at Pretium.
We actually started at Silver Standard. So we took Silver Standard from, a 10 billion market cap to about 2.4, 2.8 billion. Developed a very large resource, put in, we developed
built a mine
at Perquitas, and took a number of other projects which the latter management sold after we left, that went into production and then moved on to Pretium. So we've got a history of technically advancing projects through feasibility and putting projects into production. And there were a ton of learning curves at Pretium. Hopefully we don't have to relearn are some of those lessons.
Yeah. Well, Bruce Duck, I guess, was a learning curve for everyone. But in terms of the kind of share register, you talk about some individuals rather than groups or family offices helping you. Are those just like friend? I guess glorified friends and family?
No, more arm's length. Just people interested in the story and willing, following. So a lot of people have followed and come into the stock because of our reputations, what we've done in the past. That's why we're committed to making P2 Gold a success. We've got our reputations that we feel strongly about. We want to make sure that we're successful.
Right, and I guess timing is important in all of this. Obviously, gold markets on a rep. Copper is trying to jumpstart into life. We shall see where that goes. Does that give you sort of some degree of confidence from the kind of conversations that you may be having with investors when you're trying to pitch this?
Yeah, absolutely. We're in a positive and metal environment. We've worked through a lot of cycles. There's a lot of gray hair, and so we realize when the cycle is strong and going with you, that's when you have to really push. You can't sit back. So the way we've gotten to where we have over the years is by pushing hard when we need to push hard, and that's what we'll be doing here at P2 Gold.
Right, gentlemen, I appreciate you coming back on the platform, telling us about it. I'm glad you're still beating the drum and, more importantly, pounding the streets and telling the story. So stay in touch. Let us know how you get on. Okay.
Appreciate it. Thanks for the time.
Yeah, thank you.
Thanks, Joe. Thanks again.
Bye.
All right.